Appraisal reviews and second appraisals, meaning when you're getting a home loan, let's say in this case a purchase, but it can be true and applicable to refinances as well. But when you're buying a home, there is a chance, and we don't like it, there is a chance that there may be an appraisal review that's required or a second appraisal. So let me give you kind of what that means and why it's needed. And the good news is it doesn't happen often. The bad news is when it happens, nobody likes it because it adds both time, a little extra added just anticipation and stress, and potentially could add more cost. So let's talk about just kind of the big picture. So first of all, an appraisal is where an appraiser goes out and assesses the value, the property's condition and quality, and all the other properties around it. Says, okay, what's sold lately and what's this look like? And they give you a value. So when the appraiser provides a value, certain loan programs, we're going to talk about Fannie Mae and Freddie Mac. That's conventional, that's conforming loan amounts that say, okay, here's Fannie Mae and Freddie Mac. The other side of the fence, the government side, the FHA, VA, USDA, it's kind of is what it is in this example where it's like those values, they are what they are. But this case for conventional Fannie and Freddie stuff, they're going to run it through their own little internal process and they're going to give it what's called an SSR score. I got to be honest, this thing's been around for 15 plus years. I don't know when it came out. So 2010-ish, I don't know, somewhere in that range. And the SSR scores, they give a valuation, and maybe it's after 2010, doesn't matter. Point is, it came out a long time ago. And the SSR scores, I forget exactly what it stands for. I'm sure it's something like satisfactory rating or something like that. And it's a 1 to 5 score. And the higher it is, where it's closer to 5, if it's a 4.5 or something, that's going to send up the signal that says, hey, we need to do a closer look, deeper dive. And a lot of times you may find this for like rural properties where there's just not a lot of comps around, or when the property is unique, or maybe sometimes in like newer developments or something where this is the big house, the first one in the neighborhood that just became a McMansion and all the others aren't quite there. So something in their system, Fannie Mae or Freddie Mac has alerted us to say, hey, we want a second look. So let's talk about those second appraisals. There are different types of reviews. So there's what's called a desk review and a field review. The desk review is what it sounds like. Somebody at a desk, like typically a chief appraiser internally at a mortgage company or somewhere else outsourced type person is going to say, okay, based on data I see and just a closer look, second opinion, somebody just says, hey, you're good. Or you know what? Man, I see we should have probably used this comp. And then there's more conversation between the appraiser and that individual. But that's kind of what a desk review is. A field review is going to say, man, we actually send somebody out there. It's just so funky. We're going to send somebody else out there to go do a second look and just make sure the house is what we see, or we can see what it is and feel what it is and see the area. So that's a field review. Typically, it's going to be like another appraiser that somebody has just on, I don't say retainer, but hey, go do another field review. So it's not a full-blown appraisal. It's more of just kind of a second look, right? Just to make sure it's a second opinion and the analysis is there. So that's the appraisal reviews. If on conventional financing, they just think this appraisal just straight up stinks, and it's very rare. This is not a normal thing. But if like, man, this appraisal just straight up stinks, then all of a sudden you might need a second appraisal. That is rare, very, very rare. In fact, most of the time they don't want you to get a second appraisal. But if we on the other side, if the value isn't what we think is accurate, let's say that we being the loan originator and the borrower and the realtor, if we just think, man, that value stinks and the appraiser is incompetent and didn't do their job or were lazy or missed something, and they won't change it. Again, rare, but you can say, hey, we want a reconsideration and look for a second appraisal. And you got to make a really good case for it, but it can happen. So sometimes it can be good. But overall, having a second appraisal, like I said, it just adds more headache, more work, more cost, slows things down. So that's kind of the conventional way of doing it. Like I said, for government appraisals, FHA, VA, USDA, it kind of is what it is. In all instances, all programs, if you get an appraisal you don't like because it's inaccurate, not because you don't like it, but you think it's inaccurate in terms of value or comps used or things like that, you can always go back and do a reconsideration to say like, hey, have you considered all this data? Here's stuff that you didn't include, or here's what we feel like should be used instead of what you use because they're better comps. Like you can always do that. But the second appraisal is not good. Now, there are programs like government programs, for example, FHA, if it's a flip in a good way, fix and flip, somebody did something, FHA might require the two appraisals and just says, hey, when they do that, they just want to make double sure that everything's the way it should be. Because back in the meltdown days, the mortgage meltdown. What led up to it is, appraisers were in cahoots with investors. Different world back then, but that's why that typically a lot of times they might require two appraisals on those flips. Jumbo loans, do it $2 million loans. They're typically $1.5 million and up. You're somewhere now in the range of them saying, hey, we want two appraisals. Just big loan, big risk. They're just going to say, hey, give me two appraisals out of the gate. So that doesn't waste so much time because at least you know it up front. You order the two, they get done. It does kind of stink because you might have one that gets you the value you want, the other one that doesn't. You're like, oh man, that stinks. And they're, as you can guess, they're going to take the lower, more conservative approach. So just keep that in mind. Let's see what else. Another instance where you might get two appraisals is just if you switch lenders, right? So if you're working with the lender and they can't get it done for some reason, you call the mortgage mark team because we're going to be the knights in shining armor. We might require our own appraisal, maybe because we do want one, maybe because that other one, maybe that's why they're calling us. Maybe they had a bad appraisal and that lender can't and won't challenge it, and so they got to come to us. So that's an example of needing two appraisals, but that's not really needing two appraisals. That's just getting two appraisals. The other part might be that if it is a good appraisal on the other side, we can transfer that. We can get it over to our side in most cases because it's yours. You paid for it as a homeowner, so you should be able to transfer from lender to lender. Beyond that, two appraisals, you might, if you're getting a first and second lien, rare, but a second lien lender might require they own. They typically don't. They'll use the one that the first lien lender gets, but I can't speak for every bank out there, so they might require that. But really and truly, again, you can't get second appraisals just because you don't like the value. If you feel like there's something inaccurate, you can always ask for reconsideration. If you can really prove that the appraisal is in fact garbage, not done right, and the appraiser's refusing to do anything or change anything, then you can maybe ask for that consideration. But those are the reasons why you might get a second appraisal. Or appraisal review. Appraisal reviews, most times we don't even notice. They just kind of happen in the background. And like I said, most of the time they're fine and good. They're just kind of there for quality control. But if you have any questions, let us know. The Mortgage Mark team, our philosophy is I always tell folks, if I'm going to lose sleep at night, so are you. So if we get something where it's a high SSR score, or we got to get a second or a field review or desk review, we're going to let you know just to keep you in the loop. So that way we don't surprise you if something does come up. But some lenders may not. So you may not even know it until it's a problem, which I don't believe in that philosophy. And I think that's a bad way to run a business, but that's the way it is. So if you have questions, call us in the process. We'll let you know if it comes up, if it's your loan in particular. And certainly, as always, if you need something, reach out to us. And when you think mortgage, think Mark.